Sugey, welcome to Keep What You Earn.
Hi, thank you. Thank you for having me.
Of course. Would you just introduce yourself to everybody listening? Let them know who you are.
Yes, of course. So my name's Sugey Piedra, and I co-founded our business called Prominence Business in California. We are federally licensed, so we work with clients across the United States. I'm an enrolled agent, so federally licensed to do taxes. But I mean, numbers is just my thing.
Numbers is my jam too. And for those who don't know what an enrolled agent is, let's take this opportunity to shed some light on I would say like the most underappreciated credential in the financial world, in my opinion. I try to give you guys some publicity, but I think the enrolled agent has horrible marketing as a brand. So I please share what an enrolled agent is for those who don't know.
So it's a federal license that we get, through the IRS. It's a 3-part test: business, personal, and, ethics. So, but it's very specific to tax. And I do have my accounting degree, and I've been doing taxes for over 20 years. So the enrolled agent just felt right for me, since that's what I love to do, the tax strategy session stuff. CPA, hey, I commend all the CPAs out there that, have done their exam, but I didn't feel like it was for me. Sometimes I regret it because, like you said, when I say I'm an enrolled agent, they're like, what's that?
Yeah.
But yeah, it's not as known, definitely not as known as a CPA license.
Yeah, everyone says like I need a CPA, and like they really mean an accountant or a tax pro or something else. I feel like the CPA brand is really strong. It's like the Kleenex and tissues and the Band-Aid and bandage, right? They say I need a CPA, but they need like a tax professional. But the enrolled agent guys, I'll commend Sugey. It's concentrated in the tax content, and like a CPA, it's a quarter of our exam.
Right.
For the EA, it's 100% of their exam. Right. So if you want a tax specialist, I actually would look for, if it were my taxes, I would look for an EA over a CPA 9 times out of 10, because they're completely engulfed in taxes if that's all you need, versus a CPA definitely has a more diverse education and can have different specialties as well. Whereas an enrolled agent, I just inherently, it's a tax specific thing, and I commend them. And they can do almost the same thing CPAs can from a capability standpoint, representing and talking to the IRS and things like that. That it's almost like it's all the same function for, I would say, sometimes less money, because again, the brand. Like, again, people like they have the 3 letters and they think they can charge more, right? Or people just perceive the value differently. So thank you for clarifying that. Guys, go hire an EA. They're awesome. Not executive assistant, enrolled agents. Now, with that being said, Sugey, let's talk about, I know you have a passion for taxes, but one of the cornerstone things when it comes to tax preparation and tax services is, garbage in, garbage out, we always say, and what you bring to the table as a client. So can we start things off with, when it comes to organizing your finances, when it comes to having a successful tax season, what are the biggest variables for you when it comes to being able to serve clients successfully?
Yeah, so definitely, I love taxes, but taxes to me is, the documents that you fill out, right, at the end of the year, but with numbers that you should have been keeping track of throughout the year. And so I think that's where the misconception comes on. I get a client, they just want me to create this return, and they're either surprised, shocked, disappointed, all of the above with the final reports. And I'm like, well, this is why tax planning comes into play. This is why, your bookkeeping should have been done on a monthly basis, not just to prepare these documents. But what I've come to realize is, as, I've, been in this career for 20 some years now, is financial education. We fear those numbers, and I say we because it's all of us, right? I think our education system and our society has led us to believe that financially, if we don't have money, it's scary. Credit card debt is scary. Like, all that has to do with numbers and, our wealth is scary. And in reality, if we were to embrace it, and if we were to start really educating ourselves and looking at these numbers, they're tools. We could use them to excel. We can use them to know what direction to take in our business. And I think they're just underutilized because we have this fear that we really shouldn't have. But I tell clients, I don't know where to take you or how to direct you if I don't know where you're at. So I need to know your numbers as of today. The tax return is an aftermath, it's an aftermath thing that we have to do because it's regulated. But in reality, we should have been looking at your numbers, first quarter, second quarter, third quarter. And then at the end, you should already know what this report is going to look like.
Yeah. What I'm hearing is the tax return is not the destination.
No.
It's just something in the window we have to stop at on the way.
Yeah, for sure. But, once we start to educate the clients, they're actually excited to look at their numbers because it tells us a story. And so when I mean look at our numbers, I'm talking about obviously like our, profit and loss statement, our income and expense reports, right? That show us how much money came in and then where did it all go? I get a lot of people that say, I want to pay myself first. I want to do this new pay myself first kind of a deal. At the end of the day, it doesn't matter really how you do your accounting. It's you reviewing those reports. Because I don't care if you pay yourself first or you pay yourself last or in the middle. It's like, can you afford to really pay yourself? Can you afford to pay all your bills? Can you afford, where's the money going? And I like to share that when we're actually reviewing, sometimes we see that there's no measurement. So I'll get people in here who will have, let's say, $70,000 going to like Yelp. And you're like, great, but what did you get out of Yelp? What did you get out of that service? And they never really measured it. So when we start to measure things like that, they realize that the $70,000 they're paying their marketing team is actually not worth it because there's no return on their money, on their investment. And that's what these reports will tell us is next quarter, let's meet and see if that magazine you published in or, that coupon that you sent out, whatever it is there results so that you can continue to do it? Or maybe there isn't, and we should not spend any more money on that particular thing. So
yeah, I love that perspective because it's shifting the question from can I afford this to how much can this save me, or what will this do for me, or how will this get me closer to my goals? And I think that a lot of people will stay in this one-dimensional realm of like, I look at the P&L, and there's so much to unpack from what you just said. I want to start with this kind of conversation of look at your numbers. Okay. So when we say look at your numbers, the bare minimum literal of that is I'm going to run my P&L and I'm going to look at it.
Right.
Okay. Step one. But I had this revelation recently, Sugey, when I came back from the doctor for like a checkup or whatever. And they said, you need to get your blood work done. And then they gave me the report of my blood work. And I looked at it and I was like, I have no effing idea. Like, what's good?
Right.
What does 2.8 mean? I have no, like, it's in a vacuum. These numbers don't have meaning without some type of scale, without a translation, without a key or a legend to be like, this is what's good, or this is where it should be. Mm-hmm. And I think that what business owners crave is what's good? Right. What does good look like? Where should I be? How far am I away from this? And I think they're not connecting. They can read these numbers and say, okay, I see that I spent 40 grand on marketing. Mm-hmm. Now what?
Right.
And I think the next layer is like, what is that conversation after? So what does that look like with your clients or with folks you've worked with to bridge that gap between simply looking at the numbers and actually interpreting them?
So obviously we're all going to have different goals, right? So we need to have a goal of where are we going? How much do you want to make this year, right? And then when we look at the profit and loss statement, we like to break it up on a monthly basis so that we compare how much money did you bring in January? How much money did you bring in February? Did it go up? Did it go down? And why? That's the key right there. Why? Why did it go up and why did it go down? If it went up, we want to continue to do that, right? And there's in all of our businesses, there's cycles, there's industry cycles. For example, we have tax season. So if you look at our books, we're always going to have a heavier months during tax season. Why? Because everybody needs to do their taxes by April 15th kind of a deal, right? And that's great. But we also want to look at what does December look like, because December is going to be one of our slower months kind of a deal. So businesses tell us a story, and that's what we need to look at is we need to compare one month to the next so that we can say, I want to continue to do more of what I'm already doing, or the opposite. Hey, there's no return on investment on this advertisement that I did, or I need to do more. I need to try another way. So that's where the trial and error comes in, right? I'm all about making more money instead of just saying, I want to save on eating out less kind of a deal, because the same amount of energy goes towards either one. And for me, it's like, hey, let's go make more money. So if you want to make $1 million, then let's chunk it down so that we make sure that every single month you're meeting that goal. So you make that $1 million. If it's realistic, if it's not realistic, those numbers are going to tell us when we compare month to month. So that's how I would say start to diagnose it, because everybody has different goals. You know, what I make and what you make and what someone else makes could meet our goal and would be totally fine. So we can't go off of that, but we could definitely compare one month to the next and see what changed and why.
Yeah. And compare it to what you want to be at. And, you know, even if it goes up or down, it's based on expectations you're setting. Like you said, if we had a dip in December, it's like, well, that's expected because we know that that's our lowest time of the year. And we also, this is the other factor, is you anticipate for that. So you go based on knowing that. Now we have higher goals for, say, September through October, because we know that's our chance to reclaim some revenue that will have to take us through those slower months. So now it's really about zooming out, looking at the seasonality of your business, but also looking at trends in history to go, historically, this has been lower. So maybe we need to, you know, put away some extra acorns, you know, make sure that we're in a good position to support that cash flow wise, and really thinking forward looking in the dashboard as opposed to the rear view mirror and just looking backward at the numbers of what happened. It's like, what can those numbers tell you about what's going to happen in the future? I don't think there's enough focus. Would you agree on future focused thinking in business?
For sure. And I mean, when you also look up those numbers, you also have, you know, you could say, you know what, December is my lowest month, but I need to make at least 10,000 because that's my overhead, right?
Right.
So a lot of us walk around knowing we're making money or we're not making money, but how much do we really need to make just to meet that overhead? Those reports also help us tell what our average spending is, right? So before we even start to cut our expenses, it's like, what do we actually need to make to just break even in this industry? And include your pay in that, right? Because you still have a mortgage to pay or your rent to pay or whatever, right? So include those expenses in there as well, so you know how much you have to make. But I also realized that once we started to break down our financial reports like this with our clients, I saw that there was a drive to go make that December, if that's your slow month, a better month. That's where they focused. They decided to do more events. They decided to, you know, to put out new gadgets, whatever it was, to make December come up. And so you realize that people change when they start to look at their numbers, and it becomes a challenge. It's like, oh, December's not going to be my slow month. Watch, I'm going to do this. And before you know it, they reinvent something and they pick up their sales, which is what I love to see in my clients when we start to break it down, is they start to use these as a tool to umph them for the, and make, you know, and reach those goals that they set for themselves. So I get excited for them.
Oh, same. I do the same thing with my clients. We actually just had a revelation with one of my clients where we were looking at their cash flow forecast because they were feeling like, it always starts with a feeling. Would you agree? It starts with a feeling of, I'm feeling like our cash flow isn't where it's supposed to be. I'm like, okay, let's look at it objectively. Let's see what the data says. Because there's what your gut says and there's what the data says. And hopefully they align so that one isn't lying to you. But the data always tells the truth to me. So we look at it and say, okay, it looks like you cannot afford to have a revenue month under X dollars in revenue. Like you can't afford that because you won't be able to cover your overhead, but also they had a low cash reserve. And I said, we don't want a zero cash flow month. We want you to be making a positive 50K cash flow month just in order to meet your goals of reserve and support all the overhead and the outflows and your personal pay and all those things. We need to be making a net cash flow positive of 50K a month. So even though one would say, we're positive 10K cash flow, that's good, right? It's green. It's not red. Like that's good. I would say, however, your goal is to build a reserve right now. And if you're not building that reserve, it's not like subjectively, quote unquote, good. So we're not meeting our goals with this. We're actually moving in the other direction. So what you have to realize is that it's not as like black and white, red and green. It's like, well, is this moving us toward our goals or away from it? You know?
Yes. And once you really start to do that, I think the clients, like I said, become very positive and energetic to look at their numbers. Clients are excited to come in and meet because they're going to see the results of the hard work that they put in. And I'll tease them when there'll be some will say like, yeah, like I feel like I didn't even make a lot of money. I'm like, it's again, that gut feeling, that emotion. But sometimes we get in our own way, and I'll tease them and I'll be like, hey, my dad, when I was little, would always tell me like, I should have like X amount, $100 extra in my bank account this month or whatever. And I'd be like, yeah, but you didn't account the bank fee. You didn't account like the auto draft of this or the auto draft of that. It's because the accountability in our head, or, the numbers we think should be, what they should be, they're not. But when you pull these reports, they're telling you the truth. And so sometimes clients get so surprised that they actually made more than they thought they did. Right. And That's exciting to see that the needle's moving in the right direction. But these reports help you really take a look at that. And I encourage clients to do it, on a quarterly basis minimum. But if we could do it on a monthly basis, it helps you drive that energy of where it needs to be focused for the next month.
Yeah. And could you walk through for our listeners who are now listening to this and going, you know what? Yeah, that makes sense. Now, Sugey, what do I look at? What should I be pulling? Who should be sending this to me? What should I be doing to what does this process look like every month or every quarter in terms of my responsibility as a business owner?
So typically, if you have a bookkeeper, right, you should have a team, right? Whether it's your tax planning individual, your tax preparer, financial advisors, your bookkeeper. It's like these individuals, to me, we all need a huddle if you are the focal point, right? And so I rely a lot on, if you have a bookkeeper that, needs to send me these reports, that it's being done month to month. Now, sometimes bookkeeping is only done 12 months just for taxes. Well, we need to change that. We need to change that. And you need to have those books done reasonably, right? If you're a bookkeeper, I get it. It's, everybody ends on the last day of the month. So how can you get, hundreds of books done all at the same time? But it needs to definitely change from them being available to you only for your tax return. And they need to be available for us the following month or within a reasonable amount of days after the month ends. So that we can look at those reports. Now, if you're doing your own bookkeeping, great. Sometimes I'll even have clients start to do their own bookkeeping because they start to understand where the money's going. They start to understand how money comes in and money goes out. And so I like that because then it's not, well, I didn't even know I was paying for this, or I didn't even know I was paying for that. Now they get to see where they're actually spending their money, which is kind of cool. So an Excel spreadsheet will do. There's so many stuff out there that's free, but we will provide them an Excel spreadsheet. That Excel spreadsheet, instead of it just being a regular profit and loss of all the income that came in, we have broken it up for them over 12 months so that you take the time to put in what came in January and then where did it all go for that month and then versus the next month. Because I'm telling you, clients, once they start to do a comparison between, between month to month, it's amazing what they can do. So these reports typically will come from a bookkeeper, your QuickBooks reports, or an Excel spreadsheet that you keep.
Okay. And then, so they get the reports. What are the reports they should be pulling or asking for? And then what do they do with them? How would you recommend they consume them?
So, So again, the profit and loss statement is one, and I would ask for it on a month-to-month basis. Okay. You're going to want to pull your balance sheet, and the balance sheet will display what are your assets and what are your liabilities. You want to keep those current because again, you want to know, how much truly money, what kind of assets are, what's the value of your business? Like what's on that balance sheet, right? What is it saying about you and your business and your strength? And then we have the cash flow. The cash flow will just tell us, how much is really available to use. Because there may be stuff that's floating out there or, things that you haven't received yet. So we want to look at that as well. But overall, when you are trying to, I have a lot of clients that do real estate investments. What is the first thing that your bank or your lender looks for, right? Is these reports, your tax returns. So those are also good things to look at to see how financially strong do you look on paper? How financially strong are you should you want to buy your building in your office or whatever? Because a lot of us wait until sometimes it's too late. And when we provide these reports, Since we didn't know about them, we didn't look at them. When the bank looks at them, they are saying you can't afford, or we can't lend you money to buy the rental property or to buy the office building or whatever it is you're trying to do. And so by pulling those reports and having them and us learning how to read them with the clients, it provides strength all around, in my opinion.
Definitely. So going back to this, when you say like you need to have the P&L month by month, do you mean like showing each month or like having it on a monthly basis?
No. So for example, if you use QuickBooks, you can actually ask QuickBooks to break out your profit and loss statement and show it to you in comparison in a month-to-month basis. So it'll line up January, February, March, all next to each other. So that you can look at them in one piece of paper, all of them side by side.
Gotcha.
You don't want to have 12 pieces of paper. You want to have one piece of paper where it lays out all 12 months. And that's how the Excel spreadsheet is that we provide, that you can download on our website.
Awesome. And then the balance sheet is just like a point in time thing. So you would want to run that as of the day, like just there's one balance sheet, right? Like one statement.
Correct.
And then the statement cash flows, what do you recommend?
So typically the same year to date, if possible, most of them, that's what you want to look at, the most current.
Okay, gotcha. So if we can run those reports and you can get them from your bookkeeper, I'm going to give another hack too, that if you know how to use QuickBooks or you have a bookkeeper who does, you can ask your bookkeeper to work with you to make these into a custom management report that then you can just run on every single month. And then you can have that as a package that you get every month from them. It's really easy and it takes like 2 clicks in QuickBooks to do this, guys. So you could actually customize and have all those reports sent to you. Even automatically, I believe you can do now, where you can have them sent to you on a frequency that you set, so that way it's kind of like you don't have to ask for it. It kind of hits your desk for review, and you can do your CEO thing, review those numbers, see what they're telling you, and ask questions. So, Sugey, what are your tips on if you're consuming this information? What would you recommend people do? They get their reports, they look at them. How do you recommend people communicate or notate, or like, let's say you're reading these numbers and you go, okay, I probably have questions on these, but I feel like they're stupid questions. Like, I don't understand what this is, or I'm not sure why this is in the marketing account. How do you recommend people address those types of questions or consume this information out of those reports?
So I will always tell clients, look, you got to be on the same page. You got to get your bookkeeper on the same page, right? You can't just expect them to all of a sudden change or, because you are doing things a little bit different, right? So I always explain to them, look, I'm changing the way I'm doing my business, or I hired a CFO, or I hired, a tax planning strategist. It doesn't matter. It's just, this is the way things are going to be on now, so that they know that you need to be on one of those client lists that reports need to be available to you, pretty quickly after the month end. And then you want these types of reports that you're going to be asking for these reports. So like you said, they can have them automatically, or they can create a really cool package for them that'll even show in graphs, how much money they made this year compared to how much money they made this month compared to the last. QuickBooks will do quite a bit of stuff. So it just depends on how they present it to you. But, when they do that, when they have these reports and they're looking at them, the first time you look at them, you may feel a little lost, but the next month, or when you have data to compare to, you're going to start to see the trend. That's where it really starts to make a difference. So assuming you're starting today and, we're in October, November, you want to compare it to the previous months, and you'll start to see the story. The numbers are trying to tell you something. The business is doing something. And it's really sad when we see businesses fail, because we knew that they had a good product or a good service. It's just the money management, it wasn't there. And they didn't know when there was a leak in the ship, and they waited until it tanked, which could have been prevented had some of this stuff been done throughout the business.
Yeah. And the problem isn't a bad captain. The problem isn't a bad crew. The problem isn't the overall structure of the ship or the design of the ship or even its sails. The problem was there was an unrecognized leak happening, very small, that over time took it down. And that's usually the case. I think it was 80% of small businesses fail due to cash flow problems is the statistic that gets thrown around. And it's true because it's like the quiet killer because you may not recognize that that's what's happening, but it's small micro components over time. It will add up and it will be really quiet the way that it shows up. Sometimes less quiet, but sometimes it's just a gradual decline. And I wanted to ask you about this too. So we have these reports, trying to consume them. I look at it, tell me if you agree. I love two different ways to consume these reports. One is look at them, observe the trends, as you said, and generate questions.
Mm-hmm.
The other one is, before you look at them, generate the most important questions on your mind right now, and then use these reports to seek the answer specifically. So there's looking at the reports to identify any information broadly. It's like reading the whole book. It's like reading the whole journal in a sense to learn from A to Z. But then there's also the, hey, I want to like control F search, or I want to like look for this chapter or click the table of contents and get the answer I need right now. And there's different ways to consume that. So let's use a couple of examples and please do share. If you can think of any questions that your financial statements can answer for you, I'd love to brainstorm on those, but I'll use one as like, can I hire someone?
Right.
Can I afford to hire someone? If someone positions a question like that, where do you send them to in their financials?
So we definitely want to look at, obviously, what's the net profit, right? Is the business running profitably or not? Or where is there room to make some changes? When you hire someone, if these individuals are W-2 employees, it's amazing how many people feel like, well, I'm going to hire someone at $15 an hour. And so they account for $15. Well, in reality, that's not true. You've got Social Security, you got Medicare, you got other overhead expenses that you have to account for, even like the payroll service fee, right? And so it ends up costing you $2 or $3 more per hour that you didn't even know it was going to cost. And so when you look at these reports and when you look at hiring somebody, that's what you want to account for, is the fact that what's truly the cost of bringing someone on board, and do you have the room to hire that person? Most of us will say we can't afford to hire someone, but is that really what the report is saying? Is there room to, like I said, move things around or stop one thing and start another? There's always ways if that's the goal for that individual.
Yeah. And it's also a reframe of like, if we were to hire this person, what would have to happen?
Mm-hmm.
Right? So what would have to happen if we were to bring this person on? Because let's say there's a dire need, like we need somebody in this role in order to grow and in order to open up capacity to bring on a new client. We need to add somebody. So, okay, we need to add somebody. Let's insert the cost of that person into our cash flow or into our projection, right? And say, all right, if we do that, this is what would happen. Do we like that or do we not like that? Yeah. And then if we don't like that, what conditions have to change for us to be happy? Yeah. It really is a very simple, like, this makes me feel not good. How do we feel good? Like it's so simple when you break it down, right?
Yeah. I think a lot of the time, even with like marketing, hire somebody, it's an investment. It's not necessarily a cost.
Right.
We want to hire somebody to take on X amount of things off of our plate so we can go out and bring in 1, 2, 3, 4 more new clients, right? And so at the end of the day, you wouldn't have been able to make that extra money had you not made the investment on hiring this other person. So we got to look at it the same way. It's the same with our marketing. A lot of people look at marketing as a cost, but marketing is really an investment. How do you continue to put yourself in front of your clients if you're not out there marketing? But a lot of the times when we don't measure, we don't know that we're getting our return on that investment. And that's why we stop. The first thing that goes is marketing. And you're like, that should be the last thing that really goes.
Yeah, that's the engine pulling people into the machine. And that's really important. And it generates a really interesting question of like, well, where are we investing versus where are we spending? Where are we going to invest more money into generating more money or generating more time versus spending money on something that doesn't do that for us?
Right.
And maybe a standstill right now, or maybe just like an elective thing that we can put off. Maybe it's like a right thing, wrong time. And I think that what we tend to overlook as business owners is we see an opportunity. We want to take it. We can't say no. It's like such a great offer, but it doesn't make sense to invest in right now. And I think that people don't realize it's not a yes or no question. It's a yes or no. And is it a now or later?
Right. I would agree. So many times, when we look at our reports, like I said, they're telling you whether you can afford something or not, right? But if you can't,
Right.
then now you know what that thing costs, and now you know how many new clients you have to go get. That's how I did it with my business. I needed more computers, and then I was like, how much does it cost? $5,000. Okay. How many clients do I have to go get to make that $5,000? It was always about, going out to bring in so that I can invest in the new software or whatever it is that we have going. But the report's always there to support me.
And talking about that kind of management of the inflows, outflows, right? One of the biggest expenses, we know this for business owners, is taxes. And I know this is your lifeblood. You love taxes. So I would love your philosophy on this, because it may or may not be the same as mine, and there's no right answer. Mm-hmm. But there's a lot of focus lately, especially on social media, maybe in the circles that I happen to be watching, mm-hmm. where there's a lot of people trying to hack the tax code, save money in taxes, implement strategies. And they want to implement so many different strategies in the main goal of minimizing taxes, because they really feel the sting. And we're coming off of the extension season. So right now it's very prominent that, I have this massive tax bill. How do I make that not happen again?
Right.
And there's a lot of folks trying to focus on minimizing taxes. I'm actually taking a stance where I'm like, yes, but, mm-hmm. We got to look at the effort. We got to look at what's involved. We also have to look at, what if you just earned so much and built so much wealth it didn't matter?
Right.
Like, there's also that kind of objective, well, I say like perspective, I should say, on it. What is your take on like the tax strategy trend, or the sexy tax strategies that are out there right now, and how people are chasing implementation of those?
Well, I mean, first of all, they've always been around.
Yeah.
Okay. These are not new things. They've always been around. The tax law is huge, and there's opportunity there for everybody. Yeah. Yes, social media has made it to where, like you said, it's a trend, or everybody's watching or looking for it. In my opinion, it's a great thing. I want people to learn how to minimize their taxes legally and properly. They're not loopholes. It's a strategy that's always been around, But what I have noticed is when clients have been presented with a horrible bill that they were not prepared for, we can look at it two ways. You made a really good amount of money, and you just if you would have been looking at your bill, at your profit and loss statement from month to month, you would have seen that trend and prepared for it. Because I get clients saying, hey, I'm paying $20,000. It's a lot of money. You do realize that would have been $2,000 a month that you could have been saving, which is not a lot compared to what you brought in, right? But yes, presenting you with a $20,000 bill at once, it's huge. But if you would have been saving $2,000 a month, that's so doable. So it's just, again, for the amount of money that you brought in. Now, I don't want people to pay taxes. I'm against people having to pay taxes that we could have saved them had we implemented some strategies.
Right.
But what I notice is once that bill comes in, once we're running out of time, all of a sudden you become aggressive and unorganized and foolish. And you're like, yeah, just save me whatever I can and however I can. And without proper planning, you hurt your purchasing power. I'm big on purchasing power. I'm big on learning how to diversify our earnings, meaning you want to invest and make more money in different areas. But when you ridiculously just throw in the kitchen sink into your expenses, you bring down the value of your business and your purchasing power. And that hurts you for 1 or 2 years, because lenders will look at this for the next 2 years. And now you're dinged. Now you're dinged because there was no thought behind it. You were just against the deadline, and you just threw in everything, and you walked out saying, I'm so happy I didn't have to pay taxes. But really, you just hurt yourself, and you didn't even realize it because there was no thought process behind it. So
agree.
If anything, I just want clients, if they plan, you have plenty of time to do things that are legally possible and good before the year's over, with keeping your goals in mind of what you're trying to achieve.
Completely agree. I have a former client who, before working with me, so I did not authorize this, right? Before working with me, I found out she had not claimed $50,000 of cash generated from her business, and was only claiming about 40 grand. And come to find out, like, she's trying to buy a house.
Right.
And they said, you don't qualify. And she was like, why? And they said, you don't make enough money. She's like, I do make enough money. You can't have it both ways.
Right.
You can't have it both ways. I said, you can go back and amend and claim the 90,000 and pay the extra 10 grand in taxes that you tried to avoid / evade.
Yeah.
Or you could just have a humble, modest home for a $40,000 salary.
Yeah.
You got to stick to your story, man.
Yep. I agree. But I think it's also the lack of education, right? The lack of knowing. I'm pretty sure if the preparer, the bookkeeper, whoever was, if there would have been proper planning, and when you present this to the clients, they want what's going to fit that goal. No one's really trying to hide, in a sense, money. It's just, they're not educated saying, hey, look at the possibilities of you doing things correctly and look where it can take you. And wealth is built through making money, right? I mean, diversifying your money and creating these amazing portfolios. But a lot of us don't know of that. And so we make the wrong choices most of the time.
Yeah. And I say, like, we make the wrong choices, but we make uneducated choices, to your point. Yeah. And we end up, it's the whole idea of doing things out of necessity or for the short term because of the immediate pain point we feel. It's really no different than weight loss. It's like you're going to be more likely to accept a diet pill when your pants don't fit.
Right.
Like you hit the point, your pants don't fit and you're like, oh, snap, I got to spend money on a whole new wardrobe. Or I could go take this drug or something or do this like crazy ass diet for a week and I could lose the weight. And it's like, we shouldn't have to get to that point of extreme where we get extremely aggressive at the last minute, or we start cramming for the exam, if you will, for the taxes. Mm-hmm. The whole idea is to have some type of habit, to your point, of paying or of maintaining your books throughout the year. You guys know I always preach this, but I always love bringing other perspectives in to share because, heck, you may not listen to me. You might listen to Sugey.
When I find other colleagues, so we'll run in the same circles when we go to conferences and stuff. Yeah. And I don't look at them as a competition. I look at them learning how is it that they're explaining it to their clients. And it's funny because, you'll get a couple in here and the husband's like, I've been telling my wife this, but the minute that you say she understands you, And so that's how I look at it. It's like, I'll follow other CPAs or other educators on YouTubes and stuff, and I'll send it to my clients. I'm like, look the way this person is explaining it. This is the situation you're in. And hopefully this makes sense to you, right? Because it does make a difference when somebody explains it in a different way or a different perspective, a different example. For me, it's always about the purchasing power. And I want us to get out of the rat race. And sometimes as self-employed, we're back in the same rat race. It's just different. And we don't realize it until sometimes it's too late. So use your numbers to your benefit. We all can do it. It's not illegal, but it requires planning.
Completely agree. So Sugey, in the spirit of what you just said too, we're going to share with our listeners some free resources. They're available on your website to download, to do some, financial reporting. You can explain it better than I can, but financial reporting help and tax help too, some resources they can use to plan. So can you just share with everyone what they can find at this link in the show notes?
Yes, of course. So first thing is, if you're not already working with a bookkeeper, it's a simple spreadsheet that'll just help you have a month-to-month comparison. Great time to do it since we're getting close to the year end and you should be planning for the year end. And also there's just examples of deductions that you could take if you're self-employed. A lot of the times, clients don't realize that some of the expenses that they incur are deductible within your industry, or if you just within whatever it is, the service or, business that you're carrying. And so I always tell clients, it just depends on what it is that you're doing and how it is that you're presenting it. But it may be a deduction for you, but it's not for me, and vice versa. So this will give you an idea of just a bunch of things that are on there. And if it fits your business, then you should be accounting for it, paying it with your business account, keeping track of it, keeping record of it so that you could take advantage of that deduction as well.
Amazing. So all of that can be found in the show notes, guys. Sugey, any other resources or places people can find you and where you might be showing up either online or in person? Any places where they can find out more from you?
Yes. So we're very active with our social media. So prominence.services is on Instagram. And, we have the Facebook, prominencebusiness.com, Prominence Business. And so we're very active. We want to get the message out there. I feel like there's just not a lot of individuals who will talk about the tax planning purpose, the planning, the reviewing your numbers. And we all need to just, in general, not be afraid of looking, instead utilizing it to empower us.
Totally agree. Guys, check out Sugey's resources down in the show notes. And thank you so much for joining me today.
No, thank you. I love the conversation.